Good morning, everyone. Welcome to the Trade Findings and Adjustments for Thursday morning, July 25th. My name is Kevin Hurley. I'll be with you today. Look forward to talking to you and not kind of, but increasing and helping you better understand just what I was talking about on Tuesday. If you don't mind, remember this picture? Please tell me what it means. Please tell me what that means. What does that mean? Explain it to me in real life. It means we're not Warren Buffett, which is true. But what is he trying to tell you? You can wait for that good trade. I agree. Dave, I agree 100%. So let me throw something out there, though. Haven't you always heard that timing is a fool's game? Haven't you always heard you shouldn't time the market? Timing is a fool's game. You'll never get it right consistently. Yeah, there you go. A couple of you just said, duh, said, yes, I agree. I agree with you as well. Timing is a fool's game. So the question comes back then to portfolio review and how, when, why to make adjustments, when to get in, when to get out. When is the probabilities in your case? And that's what I want to go over with you today. Hopefully, I have been a very transparent mentor, so to speak. As we take a look, I've almost got, in these particular accounts, I'm almost sitting at about 8 million. We're down 35. If I was down 40, I'd be down 0.5%. The S&P is down a little over 0.5%. As I look at accounts in general, I am okay with where accounts are at today. I'm okay with where accounts are at today. Much as the market, I am okay with where accounts are today. So that doesn't mean, in fact, I should write that down too. That doesn't mean I like being down today. That doesn't mean I am okay with losing money. That also doesn't mean I feel I have to make changes in the portfolios. Because I'm protected through earnings, and I like the future outlook of my core holdings. If we were to bring in my portfolio, I'm going to show it to you in two different ways. The one I've been using for this particular class. Where's Kevin Hurley? A little tired today. Not a good night of sleep. My personal portfolio, Kevin, you're down $1,100. You're down 5%. Well, 5% plus, right? Well, something I understand, something I have learned in a trading portfolio, there are going to be bigger swings. It's plain and simple. Whether you're doing options, commodities, day trading, Forex, in a trading portfolio, there are going to be bigger swings in the market. And the key is, right? The key is to have more winners than losers. It's simple. Again, do I like being down over 5% in my personal trading portfolio? Hell no, I don't. But having a gain of, where are we at? Let's do a 14,500 divided by 27,500. I'm still up 52.7% year to date. And this particular portfolio, I am still up 52.7% year to date. Now, some of you go, no, you're up like 66%. In all honesty, this portfolio started out at 27,500. I have pulled money out, quite a bit of money actually, because I've been paying for things and have trips and that kind of stuff. So I've pulled money out of the portfolio. But let me go through my thought process and how I'm deciding to make adjustments or decisions. If I was to pull, let me pull a couple snapshots I've taken of my portfolio already. Where are you? Crying out loud. Sorry by name. There they are. As I look at AOBC, my cost basis has been dollar cost average down, right? I'm going to do some highlighting here or some pen work. 66.5. My cost base is 65. I'm down $9. I have till January 2020. Tell me, can you live with that portfolio? Is that a livable portfolio? I see a couple yeses coming in that position. You know, yes, of course. But the correct answer you should have told me, Kevin, why don't we look at a chart? Why don't we find out if technically I'm looking at a good trade? Technically, I'm still bullish, although it's turned down. Technically, I still have a 50-day support level. No crossovers. I mean, in all honesty, technically speaking, I look okay. Little pullback here, some profit taking. That makes sense. My exit point would most likely be touching a resistance level 1 right up here. That would be when I get out, take a profit, and be done with it. So correct, I should be looking to validate at least the technicals on my trade. Fundamentally, good earnings report, we're good to go. Bank of America, $29.04 cost basis. I'm up 280 year to date, currently worth 35 cents, but I have 50 contracts. 50 contracts, I'm sitting about $1,500. That's about 7.5% of my portfolio. Gonna play, I hope you guys can hear those chickens in the background, right? They're clucking, they're laying eggs, right? So technically speaking, you know what? I think I look okay. 280 divided by 1,500. I'm up 18.6%. I have dollar cost averaged a couple times, so I might take a look at my portfolio. Say, hey, you know what? If I could possibly get out or limit some of my exposure and close 2 of these at a 35-cent position, good till canceled, I can lower my exposure down to about 4% in a portfolio, which between 4 to 5, I'm okay. A little bit like 7.5, a little rich. But I can free up some cash. It wouldn't hurt me to try to free up some cash because right now I only have $1,298 to play with. This will push me back up to that 2,000. Baidu, long-term trade, sitting at a cost basis of 837. I know this cost basis, in all honesty, with making other trades, is actually closer to $9.43. I've got 3 contracts worth $820. You guys could bring up a chart on Baidu and say, Kevin, you're bullish. You are bullish out to June 2020. I could not technically justify being in this position. Technically speaking, looks awful. Heading bearish, got rejected on the RSI median line. Can't get above the 50-day, which currently sits at 116.30. RSI is on top of itself. Still bullish on the wins percent R, but literally touched the overbought, came right down. Earnings coming up here relatively soon. I should know. So let me check my estimated on the 30th next week. So plenty of time. I'm sitting okay. I can be okay on Baidu. Technically speaking, doesn't justify it. June 2020, I bought myself a lot of time. This is a fundamental trade. A fundamental trade that things in the world economy, if it's from the ECB and pumping more money into the system, if it's better global trade, if it's a China-US deal, this is a fundamental deal. My previous time frame in September killed me. That's why I owe over $1 more than my cost basis. So I bought myself some more time. BNet shares are, it's just a flyer that's way out there. Disney, I've got a great profit in Disney. So the question is, do I take a profit, 1827.50 minus 1345 is $4.80 divided by 1345. Do I take a 35.8% profit, or do we let it run, knowing it could go down? I have till January 2021. Disney has a ridiculous lineup of movies. Their parks have been ridiculously full, especially in Anaheim. They came out with a new Star Wars park. I'm staying in Disney. Ford's earnings sucked. My $1 that I had a 44-cent profit in it, which was only $44. Maybe it was $440, excuse me. I'm now down on. Plain and simple, I'm now down, losing $90 overall. Do we get out? Do we dollar cost average? Do we decide to put money somewhere else? Well, again, we're $1,000. It's 4% of the portfolio. I have until January of 2021. It's a $10 strike. So anything above $11 guarantees me a profit. I don't want to sound rude, but it is only $1,000. Technically, I look like I'm in trouble. Broke the median line. Definitely bearish on a 5 and 20. Broke the 50-day. Expectations are for it to come down here. We do look good in the fact that we're oversold on a Williams percent R. I'm looking for an opportunity to add more shares down around $9, $9.20. Shares, contracts, excuse me. I'm going to add some more contracts. But again, I don't have to do anything today. I'm sitting okay. I'm sitting pretty good. Facebook. And I should actually, let me insert another picture here. If you do have any questions as I'm going through here, just fire them away at me. Come on, come on, come on, come on, come on, come on. So, let me get my other one in there. In fact, let me do it this way. Cut. Let's undo a couple things here. Let's see if I can't put this down below it. All right, so here's Facebook. Facebook, kind of going a little weird on me. 534, wildly profitable. I can take that one off. In fact, you know what? Let me just show you my real portfolio. That'll be easier. If we go to Facebook on a chart, not getting the love today. At least it wasn't earlier. Breaking, still holding 200, that's positive. Had a pretty good earnings. Still above the 50-day. Still trending higher, but we do have a break on the MACD. Could be a precursor. If we are looking at my positions today, I've got quite a few here. In fact, what I should do is do it this way. Let me do a custom grouping. Let's do a grouping. I would put one of them out there. I would put that one out there. And there we go. And I would do a call vertical. Save. Okay, so if we look at Facebook here, I've got a call that's wildly profitable. I've got a vertical that is also wildly profitable, but I'm in a risk-free trade on the vertical. In the vertical, I took a credit of $9.73 in. Or I could say this one pays for this one, and I'm profitable and I'm profitable. It would make sense for me in this particular account to close one of those positions out and take some profit. The reason why that makes sense is because I was cash poor in the account. If we get some of the Bank of America's closed, I'll be back up to $4,000 or roughly 20% of the portfolio to put some more trades on. I still have two bullish legs on Facebook. One, though, is $9.10 and I'm losing some money on. The other one is a call vertical today that, in all honesty, I'm losing $3 on the long side. I'm making up $2 on the short side. I'm making up about 66% of downward movement. I'm in good shape. I can live with this one. Again, it's not that I like losing money, but Facebook had a great earnings. They're going to be okay. I would love for Facebook to fall back down. It's like, come on, Facebook, fall back down to 188. 188, and I might double up on that long call I just sold for profit. I might buy back in again for, a couple dollars cheaper. Or I might dollar cost average my 250s. There's a lot that I could do. But the idea is, and my hey, what justifies what I'm doing? I've got time. I've got time in the positions that I'm in that justify and give me the ability to be okay. Again, not that I like in any way, shape, or form. And Dave, I know what you're saying here. Kevin, it sounds like you're justifying your losers. If I can politely go back and if I can politely go back and refute that, I'm losing $9. I'm up 2,800. I'm losing 103. I'm down 29.40. I've already booked 300 on it. I'm up 884. I'm up $4,000 against my losing position. Facebook overall, how do I see that? Sorry, I'm not up $4,000. I'm up 2,700 against losing positions. And then if we go to Visa calls, I've got 100% return, and I'm up 3,600 almost there. So please don't think I'm justifying losing positions. I'm sorry, the numbers say anything but that. The numbers say I'm certainly not justifying losing positions. But I'm justifying why I don't have to do something every single day. I'm justifying why the other day I said, hey, you can wait for earnings. You can wait for earnings, and there are levels that you buy. There are levels that you buy certain positions at. And one of them was your Disney calls a week ago. which you could have gotten in yesterday for $29.99 or 2 days ago and been up over $1. When Visa went down to 180 yesterday, 3 contracts, you're up a quarter. But a quarter on 300, 0.25 times 300 is 75 bucks. Timing is difficult. It's a pain in the butt. I will be the first one to tell you. Timing is hard. Timing's a losing game where you nibble. You do a couple contracts, you nibble. I know they can do up to 20 contracts here. They can do up to 10 contracts here. You nibble. You nibble a little bit where you have powder if it goes down to dollar cost average, if it goes back up. Hey, you could have made more, but you made some money. You're profitable. Remember, the game is more winners than losers. Looking at my portfolio, that's what makes it okay. And I'm going to cut Lance off because I know you're going to say it. Could I or would I do this with a $200,000 portfolio or a $2 million portfolio? Well, if that was a tenth of my overall money, yes, I could run a portfolio like that. But I could not run my, IRA savings retirement portfolio this way. I just can't do it. It doesn't make sense. Well, your track record, I know. But I'm not looking at the best case scenario. I'm looking at the worst case scenario. Worst case scenario says you don't trade your retirement this way. You maybe take a position out and nibble here or there, but you don't trade your retirement this way. Last point that I want to bring out. If I was looking at a trade, the trade I'm looking at that's on my radar is Boeing. And it's not a trade I would put on today. It's a trade I would be looking at on some type of bull call 3 months out in time or leap long call. And I'm looking for it down at 337 to 330. I'm looking for another $10 drop. I'm really looking at 338 to 340. It's an opportunity that comes close to being oversold. It's an opportunity that if you look at the Williams percent R, is just about getting to the point where big money, institutional money, this medium stochastics here, is going to start flashing buy, 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 buy. It's not something you do today. Maybe it's something you do tomorrow. Maybe it's something you do next week. Maybe we don't get down there and it's a trade we miss. But if I was looking for a trade, it's probably a 340 or 350 out of the money long call, a 330, 350 bull call 3 months out in time, that I'm looking for my entry point closer to 340, maybe closer to 336.68. Between 340 and 336.68, that might be my buying opportunity. That might be where I would look to nibble on Boeing. Understanding if it breaks 330, 300 to the downside, my adjustment would be to roll the short down. If I was going to do some type of leap, I'm planning on dollar cost averaging. But my leap probably has to be out to June of 2020. It cannot be a January 2020 because things don't look like they could be resolved by the end of this year. Yeah, they probably will be, but right now they don't look like it. With that said, any questions? Any questions you guys have that I can answer for you? Dave, no, I would not put this trade on today. Again, I'm trying to tell you, timing is a price, timing is an instrument of where they go in price. And so if they're going to go in price down to 340, 336.68, That's the range I'm going to nibble. It's not one I would put on today. It's not one that I feel the need to throw money at today. Again, going down to Warren Buffett, timing means for him, he can wait for the fat pitch. My fat pitch, my probabilities, my expectation is 340 to 336.68. Could I be wrong? Of course I could. Hence, I'm going to nibble. I'm going to nibble, nibble, nibble. I'm not going to throw everything all right in. I'm going to nibble. I'm going to plan for the worst case scenario, not the best case scenario. I'm going to look at an opportunity to dollar cost average if I have to. I'm going to be a little bit smart about the way I'm doing this. I'm going to nibble. Not something I would do today. Maybe I'm not doing it till tomorrow if it gets down there, if not Monday. Because the downside most recently, if it breaks through 336.68, I could expect a 330 downside, which was an older long-term support level. It's the 6-month recent lows, though. All right, guys. Hey, appreciate you being here. Look forward to seeing you next Monday night for the trade findings and adjustments. Keith Bybee will be taking care of that. You'll have an email coming out tomorrow on just a portfolio updates on currently what I'm looking at. Guys, have a wonderful, wonderful day, and I look forward to talking to you again a week from this coming Monday. Bye-bye.